Hi everyone, it's James from Community Legal Centres Queensland here. Welcome to another one of our webinars. This one looking at some of the dangerous financial products that are sold to or taken up by clients of community legal centres and ways that we can help them with some of those dangerous products. Before I hand over to our expert presenter, can I begin by acknowledging the traditional custodians of the lands on which we're from which we're meeting today. I'm in Brisbane, so I acknowledge the Shirleys, the Yagara and the Quandamooka people as the traditional custodians of where I am right now, which, as I was just saying to Lachlan, is the back deck of the Farrell House. Can I also acknowledge, I can see him shaking his head there, also acknowledge the Wurundjeri people of the Kulin Nation as the traditional custodians of Melbourne from where Lachlan's tuning in. But we've got people tuning in from across the country, and so we acknowledge that we all live and work on Aboriginal land. A copy of Lachlan's PowerPoint should be available in the handout section of your GoToWebinar control panel, so you can download that to start taking notes. We're also hoping to make a recording of this session available, and we'll email around some information about that in the next few days. There are a couple of ways that you can ask questions. You can type a question into the questions box on your GoToWebinar control panel. The other way that you can ask a question is to press that button that looks like a hand. We'll see a hand go up at our end. We can unmute your microphone and you'll be able to ask a question that way. I think that's introductory and housekeeping stuff done. So without any further ado, I'll hand over to Lachlan Edwards from Consumer Action, talking about some of the dangerous financial products that people might, that clients might be accessing that might come to see CLCs or financial counsellors for help. Lachlan, thanks very much. Over to you.
Thank you very much, James. I appreciate the introduction and don't appreciate you rubbing it in. It's 13 degrees here in Melbourne and yeah, sometimes I wonder why I live here. The coffee's good. Yeah, that's about it. So look, thanks everyone for joining in. You'll see that the title is different from the actual title of the session. Let that not mislead you. When I think of dangerous financial problems, I think of something that's pretty risque, something that's a bit of fun. The reality is we could probably do a whole series on these and it would actually be really quite interesting from a personal and from a professional perspective. Things like timeshare schemes, debt vultures, so the for profit financial difficulty businesses, like the credit repair businesses, the junk insurers, who some of you will see there's been a class action launched against in the last week, the expensive car leases providers, all of these things. We could really run weeks and weeks on this, so if you really love it, then let us know. But I think today we're going to focus on two types of products that by far are the most detrimental products out there. Payday loans and consumer leases, or otherwise kind of colloquially known as rent to buy. I say that these are probably the most dangerous because every time we at Consumer Action meet with financial counsellors, community workers, community lawyers, they will say that their clients are paying through the nose for these products and they're doing it tough because of it, and they're by far the most prevalent. So that's what we're going to focus on. Today you'll learn about one, recognising the legal problem and how the law can help your client, and I guess in terms of consumer leases, how it doesn't actually help your clients, but what you can do. So we won't be talking complex case theory or litigation, but we will be going through some of the practical strategies and steps and arguments you can make where you see these things in your clients' lives, and how you can make their lives better by hopefully removing these or reducing the impact of them. So thank you for joining us. The bigger picture, which I've somewhat gone over, is that in many ways these are businesses that target vulnerable people, so low-income people, people who otherwise have a vulnerability or disadvantage, and may include them in the ability to borrow money and pay for things, or the ability to buy things, but in our view they exploit them by doing that. So there are legal protections, so laws that exist that help them, but not enough is really what we say. And although there are some proposed changes in the law which we will get to later on, they aren't there yet. And so we need to build an understanding of why these products are dangerous and why they're bad, and ways that we can fix them, if at all. And I suppose that the alternative products are not always easily or readily available for our clients. So I wanted to just start with a story, and this came from a financial counsellor out in country Victoria, near Mildura. So the financial counsellor met the client and the client was looking for a no interest loan. She asked her about her financial situation, asked the client, and found out that she was paying about $94 a fortnight to a rental company. And this is the kind of rental company where you go into the shop and you choose what you want, and they lease it out to you, and they say, all right, well, at the end you might pay $1 and you own it. And so the client, let's call her PE, she went into the shop and got a TV, a DVD player and a TV cabinet and a stereo. Now, she was 79 years old. She lived in the local public housing in a rural area, and she was legally blind because of cataracts. She couldn't read the contracts, and when the items were delivered to her house, the delivery man said, you just need to sign here, when she said, I can't actually read this. Soon after, she realised that what this rental company had given her was the wrong stereo. She couldn't actually see the dials on it. She complained to them. This was essentially the essence of her complaint. You've given me not what I want. And when she went to see the financial counsellor said, you know, there's more than just this one problem here about giving you the wrong stereo. What they've done here is essentially lend money to you and give you products that you can't afford. And PE had actually thought, well, this company's fantastic. They're giving me a chance to have these really nice things in my house. But when she was reliant on the age pension, $100 a fortnight was quite a significant amount for her. She also didn't realise many of the important terms of the contract. Her income each fortnight was about $800, and $200 of that was, around about $200 was spent on rent. So they're really in the rural area that she was living in, there wasn't a lot left after that. When this company saw her come through the door, they provided an assessment of her financial situation to see whether she could pay these agreements back, pay for these items. They gave her a lease product, and they decided that, well, we're not going to actually ask you about your financial situation other than what your income is. We're not going to ask you what you spend your money on. We'll just use an artificial figure in our computer system, which we'll just set that as 24% of your income is what you need to live off. I don't think that anyone can live off 24% of $840 a fortnight. And if you're willing to have that argument with me, then let's have it in the questions box. But I know there are people who do it, and most of our clients do, but they're not doing it. They're very good money managers, but they miss out on some of the essential expenses in life. So to cut a very long story short, eventually the financial counsellor advocated on behalf of PE by sending a letter to them. And after a bit of back and forth with the rental company, a fantastic outcome was reached where she got to keep all of the items as she understood she would, and she actually received a bit of money back. So that's a fantastic outcome, and one that for PE, when she didn't actually know that she may have had a legal problem here, and a problem in the sense of, well, there are laws here that would have protected her from having to pay so much of her income to this company had they really considered her financial situation. And so that's what we're going to be talking about today, the ways to identify those. Importantly, we'll start with payday loans. Now, the example used before was what the law calls a consumer lease. We'll talk about that later on. Many of you are probably well aware of what that product is. A payday loan is quite simply, we think of it as a small amount of money you get and you pay it back over a short period of time, maybe the next payday, often to pay a large expense like your car rego or an unexpected medical bill, or something that's come up like that. Maybe a huge winter electricity bill. And you'll see two of probably the biggest and most prominent payday lenders there. Many of our clients will have experienced these payday lenders. You'll see that you're probably well aware of the nimble ads with the bunny on it, and just nimble it and move on. The difficulty we have here is that low-income people don't often have access to things that we might use in that situation, like maybe a credit card or even borrowing from family or friends. The difficulty is with the cost of borrowing this kind of money. People end up in a cycle where at the end of the payday, they don't have any money left, and the only way they can get by is to go and get another one of these because they can't get any money elsewhere unless they go without some quite significant everyday expenses. Or it could just put them further into debt. So the way that we're going to do this today is talk about Shirley and Shirley's case, and it's one that's based on a real story, and it's one where Shirley has multiple complicated legal problems. The credit or the financial side of things is only part of it, as you'll see when you get a chance to read through this, and I'm happy to read through it for everyone there. So sometimes people have, most of the time people that we help have a cluster of legal problems and they're complicated. You look at Shirley, she's a single mum now who went to the local support agency as a result of family violence she's suffered, and she's got a number of joint debts, so joint accounts with the ex-partner. She receives only Centrelink, and something that's not written in the slide is that in Shirley's life she had problems with Centrelink. She had a family law dispute, custody battle, and then she had this, and this payday lending thing was really right down the bottom of the priorities. But when we talk about it later on, we can see how it can make a meaningful impact for her. So let's pretend that Shirley comes to you and she says, I've only got Centrelink, I had to get this loan, I didn't even know your agency existed, and she came to you to get some kind of short-term loan to get some help. You go through her financial statement and you discover she's been taking these out since leaving her ex-partner about 12 months ago. She tells you she goes into the payday lender whenever she needs more money, every 2 or 3 months or so, when big expenses like rego come up or things for the kids. She brings in one of the last loan papers that she'd been really struggling with, and this is what it says once you get to the nitty-gritty of it. She borrowed $1,000, and this was for a rego and a service. The fee, the establishment fee, which is basically just the fee to get the loan, that payday lender charges was $200. Each month she pays back $40, and the fortnightly repayments were $320. All of that on Centrelink. She pays it back over 8 weeks or 4 fortnights. So what that comes to in total is the fees are only $280, but when you compare that to her income, it's quite a significant amount, and we've got at the bottom of the slide the equivalent interest rate, which it's actually pretty complex to work out, and it doesn't need to be stated on the loan paperwork, but when you run the figures, it's about 278% per annum, so per year. Most of our credit cards are maximum 20-odd%, unless you've got a 10, 11% card. So it's incredible when you see that, and it's incredible you see the damage that it can do to people. So what we're going to consider over this next few slides and over the course of the next part of the webinar is what laws help Shirley here, what kind of legal outcome can she get, and what options does she have. So firstly, there's one kind of thing that I want to address amongst probably some of the attendees here. Most people will think, well, why do we need the law? Shirley's situation is really that horrific that why don't we just write a letter explaining that to the payday lender and tell them to waive whatever she owes at this stage. I think in the right circumstances that's just an absolutely fantastic outcome. It can be done quickly. It avoids re-traumatising her. But that's in the right circumstances. There are two things I'll suggest. These lenders need to be made accountable for the impact that they have on people, and sometimes complaining to them and raising it with them is one way that can be done. Sometimes a waiver can just let them get away with it and they keep doing it. Secondly, the client might be able to get a better outcome, and within your resources and ability to help them, and we're going to offer some resources at the end of the day today about template letters. Hopefully you can help to assess that. And really what I'm getting at with Shirley is that she's had these for the last 12 months. So simply getting rid of whatever she owes on this might not actually be the best possible outcome for her. And we'll talk about legal outcomes being perhaps when you do the figures she could get a refund here. So without further ado, let's get stuck into it. So firstly, what laws help her? Well, there's a law called the National Credit Code. It's part of an act called the National Consumer Credit Protection Act. In short, it says that loans that fit in this category will have very special legal rules around them about what can be done and what the lenders are allowed to do. Because the government of the days recognise that these are financially damaging products. Now, what Shirley had is a small amount credit contract because it's for an amount of $2,000 or less, and she pays it off between 16 days and a year. So what that means is the lender can charge 20% of the amount she borrows, so 20% of $1,000 to give her the loan, plus 4% of the $1,000 each month. So this is what we would now known as payday loans. Importantly, and this is just a summary slide of what that table has for Shirley. Importantly, if she can't pay her loan back, if she was to just stop and not pay it back, the final dot point is 200% for the total default fees. What that actually means is that the lender can't get back from her more than 200% of what she borrowed. So the government this can't go on forever where they charge 4% into eternity. Only 200% of what she borrowed is what they can get back. Is that enough? Well, probably not. No, when she couldn't afford it in the first place. So if we go back to Shirley's case, and I'm going to skip back a couple of slides, she had $200 establishment fee, which is 20% of $1,000, and $40 a month fee, which is 4% of the total amount. So that we're dealing with there potentially the legislated maximum amounts. So is there a legal problem here? Well, one way we can find out is that Shirley has a right to request documents. Anyone who has a loan that they get for a personal purpose or a personal purpose essentially has a right to request and receive their loan contract, statements of accounts and payout figures to know exactly where they stand. And the third dot point, an unsuitability assessment. So what that is whether the lender figured out whether you could pay it back at the outset. So Shirley has a right to request these under the law. So that might give her an idea of how much she's paid and what she owes them. All right? Why would you bother when you could just request a waiver? Because, and you don't want to be drowned in paperwork, well, this allows her to get an understanding of where she stands, to understand what her position is here, whether a waiver is the best outcome or whether trying to get some kind of money back, if at all possible, is the better outcome, and quite frankly, whether she'd be prepared to settle for less. One thing I really want to impress on you is if you're going to go down this route, then make sure you request every loan document, every loan contract, because sometimes in an authority or in a letter there might just be one reference and the lender will give you that one loan contract or document. It's really important to get the loan contract, the assessment and the statements of accounts for every loan you get. I couldn't put it into words how many times people have come to us with one loan that they can't pay back, and we've said, well, how many have you had? And there's been a very long string of them. And that remarkably changes the complexion of their legal situation and what their options are. So we continue on the path of, well, what laws help her? We've got the documents. We've asked Shirley what her financial situation was. We think based on what she has to pay back, which from memory, I'm going to slide back to it, was $320 a fortnight, and her income is Centrelink, not specified, so you'd ask her about that. We think that this loan may not have been affordable. So what does that mean? It means that the lender needs to make an assessment to ensure that the loan is not unsuitable. Two things come from that. Well, what's the assessment? What do they have to do? What do they have to find out about? And secondly, well, what's unsuitable mean or not unsuitable mean? Firstly, they need to ask reasonable inquiries and verify. So they need to ask you questions about your financial situation and then ask for documents about it. Okay? It's not enough for them to just give you the loan based on what they think your income is. They need to check it. There's a question about whether they need to do a full assessment of your expenses as well. We will touch on that shortly. On the second dot point, you'll see financial circumstances and requirements or objectives. Now, that's essentially some legal mumbo-jumbo for, well, why did you want to get this payday loan, Shirley? And does it meet that? It's probably rarer that we see these kind of loans meet that, or we see these kind of payday loans or leases not meet someone's requirements or objectives. So we'll probably touch on that briefly later on. So unsuitable means at the time she applied for it, it was likely that she couldn't afford to pay it, or not without substantial hardship. Okay? So in a nutshell, is the loan responsible? Well, when she got it, could she afford it? It can be put into a sentence that simple, and I think when you put the sniff test to this one, I really don't think she could afford it. And that is the payday lender's legal responsibility to assess. Okay? The second dot point is, did it meet requirements or objectives? Did it meet her purpose? Did they ask her why she wanted it? It can be as simple as that. Importantly, the word substantial hardship there's no definition of that. So it's open to a bit of argument, and if you've got questions about it, then you're welcome to pop those in the chat. But I think it's really open to your interpretation, which would mean I can't pay my essential living expenses, or I can't actually afford something that I'd already had as an expense or liability because of this. So the next thing is, well, all right, we know this law helps Shirley. So how do we prove it? How do we put it to the payday lender and convince them that we should get the outcome we want for her? This is how you do it. So at the time of the loan, Shirley's income was, and we fill that in, so we ask her that one, and perhaps the easiest way might be to get a Centrelink or a bank statement. Then underneath that you would put in her fixed expenses, so her rent or her mortgage, any other ongoing repayments she had, so things like insurances, car rego if someone puts away for it every week, things like that. If your client can easily say, or a person can easily say, what their usual expenses are, so you can put that in there, and that might be things like medical expenses like the chemist, medications, how much they spend on groceries. So that's in the second box. Then from that, in the third box, you'll add in the repayment on the payday loan, so $320, and then the amount she's left to live on. And if you're already in the negative, then I think that's a pretty clear indication that at the time of the loan, it wasn't a responsible loan because she couldn't afford to pay it or was in substantial hardship. Now, what if your client comes in and says, well, this is my weekly income and this is my rent each week, and then I'm left with nothing once I've paid all my bills, or I don't know how much I spend on things. What you can do there is check out what's called the Henderson Poverty Index. Some people will call that a benchmark, but what it is basically an updated view on what is the minimal amount or the poverty line that a person needs for their essential living expenses with rent or housing or without to live each week. And so that's one way to make an assessment of whether a loan was affordable. It's one way. It's absolutely no substitute for looking at someone's real and actual financial situation, because most people have expenses in there that the poverty index may not account for. That's essentially the way to do this. It's simple budget that involves subtracting expenses and the payday loan payment for income. Next up, we look at defining what requirements or objectives are. So this is this kind of elusive concept. It could be, and remember, this is what the person who got the loan wants. What do they want to achieve by that loan? Why did they get it? Is it how much they wanted, as in the lender's given them more than they wanted? Let's say they only wanted $500 to buy Christmas presents, and the lender says, hey, it's Christmas, I'll give you $1,500. That might be an argument to say that this loan was irresponsible because they were given more than they asked for. The time frame, so we've seen one particular payday lender in the past offering loans over 12 months where after 6 months the loan payments drop down to a smaller amount, but the monthly fees continue. And what it looks like is that it's just a way to charge more fees. So that might not meet someone's requirement for getting the loan. Well, why would I get a loan that I can pay off in a shorter period of time, but you charge me more fees for? Purpose and benefit we've gone through, and any features or flexibility. Okay. Importantly, in Shirley's case, we really don't know whether this loan met that, and it might be something where you just ask that question, well, why'd you get the loan? And she'll explain why. And so that could be met. This loan was unsuitable for Shirley. It was irresponsible because it didn't meet her purpose of X, or it was over a longer time frame than she wanted, and financially it's made her worse off, for example. So with these payday loans, there are specific legal requirements since the 1st of March 2013 that a payday lender needs to abide by. These are, they need to look at 90 days worth of bank statements, and they actually need to look at them and use them to make a financial assessment. That's the idea behind this, not just get them and put them on the file. If somebody receives Centrelink as more than 50% of their income, so let's say that they receive a New Start or a disability support pension and they still do a bit of work, if you pull their income from the pension and the Centrelink and the employment, and more than 50% of it is Centrelink, then the lender can only take 20% maximum of their combined income to make repayments. Clear as mud? And two other things. So the law says one of these loans will be irresponsible and presumed to be unsuitable if you've had 2 or more of them in the previous 90 days, or if when you go and get one, you're actually in default, i.e. you can't pay off a previous one. So what that's getting at is stopping this churning of where somebody goes to get another loan after a previous one because they couldn't afford the first one. That's what that's aimed at. And where it says presumed unsuitable is that the payday lender needs to convince the court or an ombudsman service or whoever, or you, that this loan was affordable, okay? So certainly in Shirley's case, if we request all of her loan contracts, we might find out maybe she had 2 or more in the last 90 days, or the previous one she couldn't actually pay off, and so she's already hit that bar of saying that this was unsuitable. So importantly, these are laws that have come in on the 1st of March 2013. I think what we'll get to next is that perhaps they're not enough. And there may be people who might want to add to the chat that certainly they aren't enough. And there are mooted changes to the law, but we'll get to that shortly. So importantly, and this is where you may want to start, what does Shirley want? I mean, that's what we want here. She has been through a horrific time. Does she just want to get these payday lender off her back and move on without them? Or is she up for a bit of a fight where she could get all the loan documents, figure out how much she's paid them all up, figure out how much the fees and the charges are on all the loans, and potentially get a refund of those. And that's, if she falls into the category of a refund of fees, that would be where you assess the loan as unsuitable, and the law normally suggests that in that case, well, you don't get a windfall gain, but you do pay back what you got to spend, what your benefit was. So initially on this loan we talked about $1,000, but she would get a refund of all the fees, the monthly fees and the establishment fee. So the $200 and the $40, she'd get that back. And if it turns out she's had these for over a year and there's a number of them, then we could be looking at quite a significant refund for her, quite a positive outcome, as opposed to a waiver. Now, at the end of the day, it's her decision, but there's also a little bit of work to get to that point of whether she would be entitled to a refund. And we can talk about how we might make that a little bit easier shortly. So Shirley's options, to sum up and in a nutshell: get the documents. I mean, it can be as simple as writing a letter saying, let's waive this debt. But let's get the documents. You're entitled to them. There are templates where you can which we can email out, which will just, you plug in her details and your privacy authority, and you can get those. And ask for all loans within the last 6 years. If you're swamped with paperwork, that's where you need to reconsider what the next step is, because from a casework perspective, it's not easy from there. You've got to sit down and figure out how many loans she's had, how much she's paid back, what the fees and charges are. And there's no real easy way to do that, is what we've found in our casework. So you'd sit down and perhaps talk to her about whether that's within your casework capacity and what she wants to do. And I would suggest that if you're dealing with a number of loans over a long period of time, I am going to talk on behalf of most legal aid and community legal centres here and say that that's where you should perhaps get legal advice about what her rights are and what the best possible outcome might be here. So you've got the documents. At the same time or earlier, you can sit down with her and say, well, you know, was this affordable? She might say yes or no. You can ask her questions like, all right, well, did you have to stop paying for other things because of this one? Why did you get it? What did it mean to pay this back? Was it hard to pay it back? And you can do the table, which is the checklist. Talk to her about whether she wants to challenge the loans. And the way to do that would be dot point 4. So a complaint to the Credit and Investments Ombudsman or the Financial Ombudsman Service. Now, the payday lender needs to belong to one of those ombudsman services. They are free for your clients, for the everyday people, to make a formal complaint there. And they make a binding decision like a court without the hearing. So it's really, quite honestly, an easy, informal way of running a complaint, although it may take some time. And finally, if you're seeing that there's ongoing detriment to people through these loans, to your clients, ASICs, the Australian Securities and Investments Commission, it's ASIC's job to discipline these payday lenders and these businesses, to go out there and say, well, hang on, this is what your legal obligations are. And ASIC recently did that with cash converters. They said, all right, well, every loan that you gave via the internet was irresponsible and we want you to give refunds. Unfortunately, that didn't include in-store loans. We will email out to you after this more information about ASIC's action in cash converters. So in Shirley's story, this is what we found out. She came to us with one loan. Turns out she had 62 of them over the last 6 years. She thought she'd been getting them for 12 months, but turns out it was a lot more. They were all unaffordable. She was always on Centrelink and she was always struggling to get by, let alone paying, from memory in this case, paying some of her violent ex-partner's expenses. She said that they were irresponsible and made a complaint to an ombudsman. And what happened was that the money she'd actually received to spend was about $13,000 in loan monies. She'd paid back about $18,000. So because these were all unaffordable, she got a substantial refund. And that was an absolutely outstanding outcome for her. And so that's what you can look at. I will say that it does take quite a lot of time and effort to get to that point. And there are legal services like Consumer Action that are willing to help to get to that, because we believe strongly that these products are damaging financial products. Okay. One thing I wanted to talk about before we move on is what's happening behind the scenes here. Now, there was a review last year about whether payday loans were regulated enough, i.e. whether the laws that helped Shirley here were enough to ensure that people weren't suffering at the hands of these damaging financial products. Basically, it found that no, they weren't. There was 24, don't quote me on that, recommendations to the government in an independent report about how to change the way that these laws are and how to help people from being exploited in this way. The current Commonwealth government have put it out there. They've said we agree to implement some of these recommendations and we're going to do it. So far they haven't. So what we really need is people to be fighting for clients and showing that these products are still irresponsible and keeping the pressure on the government to say, all right, well, it's time for you to now write the legislation and pass this law to make sure that everyday people can have enough money to live off and that these businesses are not exploiting them. Now we move to rent to buy and consumer lease products.
Sorry, Lachlan, it's James. Can I jump in? We've just had a couple of questions come through about the payday loans. Do you mind taking those questions?
Yes. I'm very happy to. I don't have them pop up in my chat screen.
I can read them to you. Someone's asked about in ascertaining whether the loan is affordable, or do you mucked up the language there. You talked about fixed expenses, and one of our participants wants to know if utilities count as a fixed expense.
I would say absolutely, yeah. I would say my view is if you're taking a complaint to an ombudsman, which is absolutely the right place to go, or a court, what you do need to do is prove your case. So prove why this loan was unaffordable. So the best thing you can do is put out a budget or a statement of financial situation position at the time that says, all right, my client's income was this is my client's rent, utility payment, insurances, this is what they pay to go to the doctor, this is the public transport, the fuel, birthdays for kids, Christmas, and the more detail you can have, the better. I guess it must correspond with any paperwork they might provide, such as bank statements, but I guess, James, the short answer is yes, I would say fixed expenses would be utilities. Yep. Right.
And so they're not fixed in the true sense. They're expected even though the amount might not be known to your client. I guess it's...
Yeah, fixed, I guess, is perhaps... Sorry, James. Yeah. Fixed is perhaps slightly misleading. You would include them as essential expenses, like your housing. I think there's no way around that, but they're fixed in the sense of that you pay them every fortnight. They're not going away. They're an essential expense.
Terrific, thank you.
So perhaps that will...
Sorry, go on, Lachlan.
Sorry. And the second question?
Just before I get to that, I might just invite people, if they do have questions at this stage, to send them through. They can type a question into the questions box when they go to Webinar Control Panel. They can press that button that looks like a hand on their control panel there. The second question, Lachlan, relates to the prohibition on lending. I think you said that if there'd been two or more recent loans and they couldn't go otherwise, are the lenders relying on simply their own records and what the client tells them, or is there some kind of central registry where they can see if they've been around to 5 different payday lenders down and know about it there?
Short answer is there's no central registry, which is something that advocates in the sectors have really advocated for quite strongly, but that hasn't... Even in the recent review last year, that hasn't actually been recommended as something that will come out of it and be legislated. But it's absolutely, fundamentally, the payday lender's responsibility to figure that out. It's absolutely their responsibility. They can ask, and if the client or the person tells them one thing or tells them something else, well, they still have a responsibility to inquire themselves.
They're the only questions we've had come through. Thanks, Lachlan.
Thank you. All right, we'll move on to rent to buy and consumer leases. So when I think of a lease, I think of a rental product. So maybe a long-term rental like a tenancy, or a vacation rental or a car rental, but not one where you're going to own it. That might be a rent to buy. So what we see here is that all of these companies, perhaps not so much anymore motor finance wizards, they offer what the law calls leases. Now, a lease is where you rent a product and you pay more than what it's actually worth. So let's say you're renting a fridge and you rent it for 3 years and you pay $3,000, but the fridge is worth $1,000. That's what the law calls a consumer lease, where you have where you're not going to own it. Okay. The issue we see is that fundamentally marketing tools like the slogan "rent to buy" are different from the rights you have under the contract, and are somewhat misleading, leading to really poor outcomes for our clients, and being, quite frankly, very confusing. The point is, though, that a lease and a consumer lease and a rent to buy are treated substantially and fundamentally different under the law. And a consumer lease has very few legal protections. And what we've seen is that some of these companies use those loopholes, might we call them, to exploit people and charge them more. So, for example, with a consumer lease, say I'm going to go into the shop, like the case study I used early on, the example I used early on, there is no limit on the fees and charges they can, or how much at all they can charge you under that lease. They can charge you $1 million, whereas with a payday loan there are certainly the fees and charges limits that we talked about before. So immediately you can see that this is ripe for exploitation. So let's get into Shirley's story again. Shirley moved, and unfortunately she did come back to our service, and she moved, and to get into the house she had to get a fridge and a washing machine, and she went down to the local store and she saw a sign that said rent try buy for $2 and thought, well, this is pretty good, I'll get these and I'll try them and I'll buy them at the end for $2. It said, what I've left off that slide is it said 18 months. So about 2 years later, she remembers that her contract should be at an end, and she struggled all along, and she calls the company Big Renter, who says she has to make an offer to buy the fridge and the washing machine. She says, oh, all right then, well, how about $2? And they say no. So she thinks, well, something's going on here. Maybe I'll just go back to my financial counsellor or my community lawyer. And she brings in the paperwork to you, which is a one-page contract. It shows that she needs to make 52 fortnightly payments of $165. She'd paid that. In total, she had to pay $8,580. But after 2 years, she could only buy similar goods for $2. And that's not explained anywhere what similar goods are. Or she could make an offer to buy the goods that she had at her home, so she can go to the Big Renter and say, well, how much do you want for them? And if she didn't do either of those, she had to keep paying $165 a fortnight. And she figures out that actually on this receipt here, when I bought these things, they would have been worth $3,900. So you can see that immediately there's quite a substantial markup what she pays them all up. Now, over the next few slides, we'll go through the same process where we'll talk about how the law can help her, why this is a legal problem other than the bare fact of that it stinks, and what her options are. Importantly, this is a consumer lease. So the contract says that it's a hire contract where you have no right to own it. You pay more than what you would have paid cash. It's for more than 4 months, and under the law there's no limit on the fees they can charge, unlike those horrible payday loans. So when we run the figures on Shirley's case, so $8,580 over 52 fortnights, compared to paying cash $3,900, it's actually 92% interest, which is, I think that there's no interest on these products, if you know what I mean. It's not interest in the sense of a loan or a credit card. It's just the fee that you pay each fortnight or each month. I think had that been disclosed, perhaps Shirley would have done something different, but ultimately what she has is this contract without those legal rights. That kind of thing needs to be explained to her. The National Credit Code says this is what a consumer lease is. It helps in that it tells her what her rights are, although they're limited. So again, what laws help her? We look at the National Credit Code. So we talked earlier about irresponsible lending, so that this is an unsuitable lease. Sure, she got the lease because she wanted to own these products. Maybe she wanted to rent them. But it's unsuitable, I would think, for two reasons. One, could she afford it? So you would do your suitability assessment again. I think with this kind of thing, your financial assessment again, I think with this kind of thing, there's a certain sniff test that you do and you think, well, hang on, how does this person on the Centrelink afford that? The next thing is, well, why did she get it? Did they ask her why she wanted it? She may say, well, I actually wanted to own these things that I thought I was renting for 2 years. And you might say, well, it was irresponsible because it was unsuitable because it didn't meet her requirements or objectives. The next dot point is that this was an unjust or an unconscionable contract, and that was largely because of a number of factors that make it essentially unethical. And I'm happy to answer questions about that, but for the sake of time we may carry on. And one thing at the bottom is that the final dot point is an unfair contract term. So what I mean by that is that a part of this contract could be unfair. What am I getting at? A term of a contract is part of this lease contract that says what her rights or her obligations are. So a term might be, well, this is how much you pay back each fortnight. A term might be, well, this is what your ownership rights are. So you could buy the similar goods, or you could own this one, or you can make an offer to own this one. The term that I'm thinking might be unfair here is that at the end of 2 years or 52 fortnights, she just keeps paying. I mean, how's that fair? She just keeps paying forever. So it's important to understand that not necessarily the contract itself, but parts of contracts can be unfair and they can be voided, so of no legal effect. That may only get her so far, but in this case it might get her a refund of what she paid beyond that initial, part of what she paid beyond that initial term. So with a lease, what might Shirley get? I guess it depends on what does she want? And that's the fundamental question again. Well, what do you want here? Do you want us to write to them and get you out of this and get you paying no more? Or do you want to investigate whether you have the chance of getting a refund for being on the raw end of the deal, in the sense of they didn't meet this big renter has lent to you irresponsibly or has given you an unjust contract or a contract that contains unfair terms. So if she wants to keep the things, then, well, depending on how much she's paid, if she's paid more than what they're worth, then perhaps she could get an outcome where she gets compensation paid to her, and she pays no more. If she hasn't paid a lot and she's just really struggling to afford this from the outset, and let's say, when I say she hasn't paid a lot, she's paid less than what these items are worth, perhaps she could give them back and receive a refund minus, a kind of fee or a benefit fee that for having the items. Or maybe she could hand them back and just pay no more and find an alternative product like a no interest loan or a step up one. Or perhaps you could do a deal like what we might call a full and final settlement or a long-term financial hardship arrangement where perhaps she pays less but on a more affordable terms. And you might consider that where the client just wants to get on with the life and they have paid such a significant amount towards these items. So I think importantly it's about recognising that these leases aren't heavily regulated, but they do create legal problems for people. In short, what can Shirley do? I think again the first one is get the documents to understand where she stands. And going back to that earlier slide, get her loan contract, find out how much she has to pay under this contract, get the account statements to find out how much she has paid, the payout figure to know what is supposedly left, and do a financial assessment. Could she afford this at the time? Point 2 is what we've just gone through. So identifying what her best possible outcome is. And if she wants to fight this, then a complaint to the rental company can be made. And that may be on the basis that, well, you're given an unjust and an unsuitable loan. This was not affordable from the outcome. My calculation figures are this. She had no money left over at the end of the fortnight. And what we want here to avoid going to an ombudsman scheme and making a formal complaint is to keep these items and receive a refund of all the money that she's paid above what they were worth if she paid cash, or something along those lines. The next step might be an ombudsman complaint. And I should add that probably people may be aware from the federal budget that the Credit and Investments Ombudsman and the Financial Ombudsman may be no longer by 1 July 2018. Nothing's been, that's in a process of consultation, so watch this space, but they're here for now and for current complaints. And again, the corporate regulator, you should put them on notice of these problems that these companies are creating for your clients. So, just about right on time. Remember there are specific laws for payday loans, and we've called them SACCs in this presentation. There are very specific laws, perhaps not quite specific enough. Maybe they should just ban them, frankly. But there is laws there that are to help your clients, protect them from financial problems. More than just hardship. So irresponsible lending there is to make sure that lenders do their bit and assess whether loans are affordable for people. And if you make that assessment, was it affordable at the time they got it, and the answer is no, then that might help your client get a refund, or it might bolster the arguments for a waiver, and a waiver so they don't pay any more. So it's more than just seeing them at the time that you see them and saying that, oh, well, you know, Shirley's really struggling with this. I'll write to the lender and ask for a financial hardship arrangement where we change her payments for 3 months. It's more than that. Is this a problem, a systemic problem with how the business does its business? That's where we report to ASIC. And finally, we would really like to hear your clients' stories, hear real people's stories, so we can go to the government and say, these changes that you're proposing, they need to happen now. This is what these businesses do, and this is how these laws don't go far enough, and these are real people's lives that are affected. And that's it. Thanks for joining us today, and we'll send out some more information which includes, for consumer leases, an app that actually generates a letter for you, so all you have to do is plug in the details. A specific payday lender cash converters. Consumer Action, along with some other community legal centres, have created what we call a toolkit, so a step-by-step guide to dealing with clients who've been taken advantage of by cash converters, along with information about radio rentals, class action. So Morris Blackburn have launched a class action that your clients may fall into that may give them rights. And cash converters getting in trouble with ASIC and being ordered to provide refunds to clients. We'll send some information out about that. So thanks for joining today. It was fantastic. And if you want to hear a series about dangerous financial products, then let us know.